skepticism. Should be testing detailed those areas of financial statements which involve judgments. So response should be, if risk is overall, response will also be overall. Note down this point with yourself. If risk is specific to certain item, response should also be specific to that item. Okay, now, so let us proceed. I have, okay, right. Explain in order. What is the blunder to avoid? You are not explaining the risk, that how it will arise. You directly write issue from the scenario and you write that impact. Company has may not, company has inventory which is obsolete. Hence inventory may be overstated. How overstated? Issue and impact. There should be linkage explanation how it may be or how it may arise. This is the point where students lose marks. Examiner simple crosses and moves ahead forward. This student is saying, because you have to explain audit risk. You have not to list only. Okay? Generalizing one thing. Generalizing impact on financial statement. You say financial statement may be misstated. So you must have to tell which item specifically may be understated or overstated. Okay, right. So marks are given like this. Audit risk identification. Okay, right, like this. That's it. Now I will be proceeding towards latest past paper published by ACCA. Past exam paper, which is March-June 2025. I will be proceeding towards that and we will be, yes, I have arranged that here with myself. This is the first question in the section B. Now, the first question is, explain the responsibilities of Coronado Company under the auditor's responsibilities related to fraud in an audit of financial statement. So generic question, 4 marks. Four marks. It means 4 points you need to write. It means you need to write 4 points. This is the first question. Okay. What are the 4 points you need to write? Fraud in an audit of financial statements. You are auditing the financial statements of a company, and in the company a fraud may have occurred. May have occurred. So what are your responsibilities related to fraud? So first of all, logically speaking, financial auditor has to detect misstatement in financial statement. We know that due to fraud and error. First of all, we will write that. Auditor has to detect material misstatement in financial statements due to fraud and error. So auditor will, at planning stage, assess risk of fraud. Causing misstatement in financial statements. First of all, assess. Then auditor will respond that risk which is assessed above with audit work, with audit procedure. Auditor will increase professional skepticism while doing audit that there might be a fraud in the company causing misstatements. To explain, you have not to write bullet points in exam. Discursive line, I will show you the answer, how it should be written. And then, if fraud is detected, which is causing misstatement in financial statements, auditor will discuss with management to correct it. If they don't, talk to directors. If still they don't, then auditor will consider its implications of misstatement on financial statements and audit report as well. The auditor may need to report that in audit report. So 4 marks are done very easy. I don't think any question can be easier than this one. Yet students struggle. They say because they have read so many huge articles and the books and complex things in the notes and the books. Be logical and write and move on. So this is the sorry. Yes. Right. So the next this is the answer written, you see, in front of you. First of all, responsible for reasonable assurance. If you write it, 1 mark for writing it. The first line. Second line is here, second marks. You can see, identify and assess the risk of material misstatement due to fraud in financial statements. But explanation will be there. Third mark is here. Obtain sufficient appropriate evidence regarding through designing appropriate response to the risk. Fourth mark is here. They must, yes, skepticism is not written here, but you can write that as well. They should keep professional skepticism high to the fraud and suspected frauds. And fifth mark, it is for 5 marks. You have to write 4 points only. Not difficult at all. But remember, I have not created bullet points here in the answer. There are no incomplete sentences. That examiner should understand what I'm thinking. That should not be approach. Complete sentence explaining a one valid point will get you 1 mark. Okay, now let us proceed further. So the next question is here. Describe 8 audit risks and explain the auditor's response to each risk. 8 audit risks and auditor's response to each audit risk. So we will be talking about it now. That's the topic. So, students, the point is, here is the scenario in front of you. Just a minute. My screen is frozen. Just a minute, please. Just a minute. My screen is frozen. Just 1 second, please. I need to reconnect my iPad after disconnecting it. Yes, now it is. So let us start doing it. So Pimento Company. The question is Pimento Company, whose audit is being performed. It is 1st July 20x5. You are an audit supervisor of Coronado Company and planning the audit of Pimento Company for the year ending 31st August 20x5. The company is a retailer of food and household items with a large network of stores across the country. Forecast profit before tax is $18.8 million, right? The audit manager held a planning meeting with the finance director Now, and has provided with the following notes, right? Okay. So, Pimento Company's internal audit conducts an extensive program of controls testing across the network of stores. Internal audit aims to visit every store over a 24 months. Okay. The audit manager has obtained permission from finance director for external audit team to rely on controls testing undertaken by internal audit department. Now, so what is the point here? This is the first audit risk, a different type. This is basically, it is detection risk. What is it? Detection risk. How? If I'm reading a point and I cannot visualize the answer, so there should be, the issue. I must be concerned why I am unable to analyze and identify the matter. Now, the next point is, yes. So, how to explain it? Audit manager has obtained permission from. So, if auditor is going to rely, so auditor must need to test the audit work, the control testing done by internal audit. That whether an internal audit has planned, performed the work properly, and if that work was not properly performed, if that work was not properly performed, an auditor is going to place reliance on that, what will happen? It means, on the basis of control testing, we know that auditor has to decide how much substantive test to be performed. What is control testing done for? To decide how much substantive test to be performed. This is the purpose of control testing. So if I am not testing the control myself of a client, I am relying on the work of internal audit, which was improperly done. So what is the risk? The risk is that the my substantive test work may also be decided incorrectly based on that. And detection risk will be there. This should be clear. So in this way, you need to explain. In this way, you need to explain. So the risk is here. Come here. Sorry. Yes. So the risk is explained here. So they have internal audit department which has conducted. Yes. You know that they are going to place reliance on their work. Yes. They must do the necessary testing of their work before placing reliance. It was properly planned. Minimum it should be written. It was properly planned and performed. Instead, if you don't want to write this much, and if the reliance plays on irrelevant, poorly performed work, so incorrect conclusion, leading to insufficient substantive testing, hence detection risk. Now, what is the risk? This is the risk, basically. This is the impact on audit. Risk explained. How risk is arising, you see, and the issue. I told you. The response should address. So the response, what is the response? The response should start from here. The external team should meet, read the reports, and review their file and assess quality of work done by them before placing reliance. Enough if you write it. Before placing reliance on their work. I have presented in front of you examiner answers. Something bad happened with me this morning. I was preparing my own answers. Almost the work was done. All of a sudden, I don't know. I didn't save the file. This is typical thing. One happens once a year sometime. Okay, so it happened with me today. I lost the whole answer drafted by me, and I was shocked that it happened with me today. So then I decided I have less time, so I have to find a way to conduct the session. Okay, now the next point is in my 20x5, a fraud was discovered in the finance department following an investigation. The finance clerk at Pimento was found to be responsible and was dismissed. As a result, the remaining members of the finance department has been allocated. Okay, fraud. Okay, which was discovered in the finance department. Now, the point is, this is the second issue, risk of material misstatement. This is the next point, additional task. How? The second and third. Second, I'll explain first. Clerk was dismissed due to fraud discovered in finance department. Issue. This is issue. Risk that there may be additional frauds and transactions which may not have been identified, which may need to be written off. And if they have not been uncovered, the financial statement may be misstated. It is generic about that issue. Skepticism increased. So, how it should have been written? How it should have been written? Yes, like this. So, the clerk was dismissed after being found to be responsible for a fraud. What? This is issue. This is risk. More fraudulent transaction. So, what is impact on financial statements? The response should address this risk, which may not need to have been covered. Response should address it. So discuss with the finance director that what procedures they have adopted to identify and uncover further frauds and relevant to financial statements. Addressing the same risk, you see, or misstated additional substantive tests should be conducted on affected areas and increase skepticism. Another direction, one is required, either this or this. You will have one mark. You need not to write both. Only one response, which is addressing the matter sufficiently, the risk, that's okay. Now, come back to the question. Yes, again. The second is, and now the work has, as a result, remaining member finance department has been allocated additional tasks until a replacement has been found. This has led to a backlog in the processing of some accounting record. So, what will happen? So, when the staff is overloaded with that work, which they were not performing before, And there will be errors and record maybe and there are a backlog. So pressure of the work, it may cause misstatement in statement. And at the end, year end, even the record may be incomplete. So the point is, yes. So how? It is generic issue. Workload is there, staff is overworked, backlog is there. So they might be overwhelmed, may not be performing well, maybe committing errors, record may be incomplete at the year end. So what auditor should do? So audit response should address this risk. This is the risk issue. This is risk. This is impact. Act well explained. And you can see here the first response is because this is overall risk of record. Response generic. Audit should be alert to the potential errors made by finance department. There should be experienced team member assigned because yes, increased testing. If I say my recommendation, yes, one and two, these two must be written. Increased testing should be carried to verify record, accounting record or complete at year end. Now, the next point is come back to the question. During the meeting, the finance director provided some forecast financial statements. It indicates that operating profit margin is predicted to increase from 12% for the year ended 31st August for 17% for the year ended 31st August. The audit files for the previous year audit include detail of adjustment which was required to operating expenses resulting from incorrect previous year adjustment. Leave it. Come to the next point, which indicates that profit margin is predicted to increase from okay 12%. So this is there was some error. 12% to the year ended, it may increase to the 17%. The audit file for the detail of adjustment. Okay. So it was adjustment related to the last year. I will leave this point for the time being. Come to the next point. Okay. Come here. In December, Pimento began online sales directly to the general public via the company website. Online transaction should be automatically recorded in the company's accounting system via a direct link to the website. During the first few months, however, some technical issues remaining that website sale were not automatically recorded in the accounting system. Now, what is the risk? Technical issues in the website, not recording sale in the accounting system. This is the issue. It means the revenue may be understated. Completeness, it may not be complete because of this control risk, control weakness. Simple is that. There is no rocket science in it. So what auditor should do? Perform detailed testing of the system. You can test the system website using test data or perform whether the error still is there, not recording the revenue, or you can write here, perform detailed testing on completeness of income and the sales. Very easy and very clear it should be. So technical issues were encountered. Issue. Increased risk of completeness. Increase understated revenues. So control risk is also increased. You may write it or not write it. So now, what should be the response to the risk? Completeness. I would suggest, if I will write only because of exam, this one should perform detailed substantive tests on completeness. This is enough because you are directly testing the revenue, the risk you have discussed. Now, the next point is, come back to the question again. Pimento company values inventory in line with the industry practice, which is use to use selling price less average profit margin, which directors consider to be close approximation of cost. This point has been repeated. This is repetition. It has been tested in the past paper. Selling price less average this close to the yes, inventory valuation. This is how this is a risk. Now, IS2 says that inventory should be recorded in lower of cost and NRV. This method can be valid if it is close approximation of the cost. Okay? If this is the risk, if it is not the case, inventory may be misstated, understated, or overstated both. May not be at correct amount. Both chances are there. You can see. This is how they are recording. Selling price less average profit margin. So we know that the method is lower of cost and NRV. This is what IS2 says. This method, if it is not recording the inventory as per matching with the IS2, this is incorrect. And inventory may be misstated. Both possibilities are there, understated or overstated. So auditor should perform substantive test on the valuation of inventory. Whether selling price less profit margin is recording lower the inventory at lower of cost and RV or not. So now come here. How to write this answer? Just see here. Inventory valuation policy. Sorry. Yes. Issue. From the stereo. What IS2 says, risk, basically this is risk is being developed. It may not be the case. And this is impact. So valuation procedure, testing should be focused. Comparing the cost of inventory, selling price. That's valuation assertion, you can see. Now, come back to the scenario once again. The company receives a trade discount from its main supplier, which is linked to the total amount purchased during the year. In accordance with supplier contract, the amount is claimed after the year end based on actual volume purchased over the year. Payment after, so read it again. What they are saying. Amount is reclaimed after the year end based on actual purchased. Pimento is expecting to include a receivable in relation to this receivable of discount of 980,000 and along with a corresponding entry in the cost of sales, which relates to goods which have been purchased during the year. So the point is, company's calculation of receivable amount of 59800, sorry, company's calculation, it may be incorrect. Possibility is there. And if the annual sales volumes, company may have misstated. to show the decreased cost of sales and increase receivables, and they may be overstated. Now, so what will be the order response? So then this is the risk. So I think there is some typo in writing the answer. It should be 980,000. Sorry, if 5 is not here. A trade receivable of 980,000 expected to be recognized at year end. Issue. This is issue. Is expected to be recognized. The receivable based on assessment of annual purchase. Issue is being told. This is the risk. Sales volume may be underestimated, overestimated. So receivables and cost of sales, both chances are there. So now this is the point. This should be verify the calculation. Client's calculation back to supporting document, including the supplier contract. What I'll be writing, because this is examiner answer, I will be a bit more correcting it in easy words. That review calculation of Pimento Company regarding discount receivables and volumes of purchases as you volume of purchases from purchases record of company. Verify to assess discount recorded is correct. You see here, because that is based on purchases. For calculation, I will check there. What is the volume of purchases there? They in the calculation noted down and verify from the purchase record of the company. Simple is that. Done. Now, the next point is come here. During the year, surplus fixture and fittings within the stores were sold, resulting in the loss on disposal of 450,000. Additionally, the facilities in each of the companies, okay, first of all, loss on disposal. So it means that, so then loss on disposal, what is the risk? That the company is not recording the depreciation charge on the at with using correct method or correct rate. Significant gain or loss both means that. Remember that. So that's why the risk is that depreciation may be understated and property plant current depreciation as well on other assets. You are selling an asset on huge loss. It means your depreciation method may be incorrect. Risk is that. So now other property plant equipment may be overstated and depreciation expenses understated. Next. So the next point is how to write it. Just see here. Issue disposal, there is a loss. So significant indicate that significant loss or gain. Depreciation method may not be appropriate. Depreciation may be understated. This is risk and this is impact. So recalculate the loss and gain on all items to the supporting documentation. So I disagree with it. This is the best one. Assess the reasonableness of representation method because that is judgment by comparing with the useful life within the company's business. With, so assess the reasonableness of the depreciation method. Now, the next point is additional facilities in each of the company's distributed department were upgraded. Now, what is the risk? This 620,000 may include some revenue expenditure related to repair and maintenance. And they may have capitalized all. The risk is that. And repair and maintenance expenditure, as per IAS 16, that should be expensed. And if the risk is that they have capitalized it, leading to overstatement of property, plant, equipment, and understatement of expenses and profits. So, what is the response? The response is that I said that this may include cost, repair cost. So, auditor should obtain breakdown of these costs, verify from the source documents to confirm the classification into revenue and capital cost is correct or not. This should be done. Now, so what is the response I have explained already. So I will go to the last point. They have not paid, the company has not paid shareholder dividend this year, choosing instead to issue bonus. So bonus issue is recorded, how it is recorded? By decreasing the reserve and such as share premium and increasing the share capital. The risk is that they may not have correctly treated it and may not have disclosed. Disclosure is also needed for such transaction. Disclosure may be inadequate. Very easy. So, you just need to follow to train your mind. Come here, upgradation of 620,000. It should be recognized as property, plant, equipment. However, if it relates to, this is the risk, may be understated. Now, so they should obtain a breakdown, response to that, nature of expenditure to verify it is correctly recorded. Now come here. They have issued shares via bonus issue. It should be accounted for as an increase in share capital and decrease to reserves. Risk issue. Now how it should be recorded? Explanation. This is basically accounting issue, typical accounting issue. This as in the previous as well. Repair and maintenance cost was also accounting issue. So we explain how it should be recorded. What is the risk and what is the impact? So review treatment of the bonus issue and agree from the share register and share certificate and verify from the reduction of enough reserves are have been reduced. Simple is that. Is that tough? Tell me. Is that tough? It is not. Only practice and focus on the points which I am telling you. That will make you write a perfect answer. And how many points we have discussed? One, two, three, four, five, six, seven, eight, nine. 9 points. How many were required? Eight. Eight were required. Now, students, the next point is which is related to substantive tests. Okay. So, substantive tests, we will be talking about that. And then ethical issues are there. A question is in this exam, in your just 5 minutes break, only 5 minutes. I'll be back in 5 minutes and continue. Apologies for getting a bit late. Yes, next. The next point is substantive tests. Substantive tests in your exam, they are very interesting actually. They are of two types tested. Let me open some. Yes. Substantive test in your exam. Yes. Come here. We know that they perform on financial statement. That should be very much clear. That they must be verifying financial statement items. And in exam, they are of two types. One, they ask you scenario specific. So scenario specific, there is one video that what should be direction of substantive tests. I have created that. And you that is on YouTube. Okay, you must watch that. That you search my name and verify that what should be direction of substantive tests. Very important video it is. You must know that. Okay, so scenario specific. The second is generic question. So, and this video is on it. Now, right now, I am going to talk about this scenario which we are doing right now, which we are talking right now. So, in this scenario, there is a question. You can see, yes, here is the question. 4 marks. Describe substantive procedure the auditor should perform to obtain sufficient appropriate audit evidence in relation to trade discounts receivable. Trade discount receivables. Now, this is scenario something specific over here. And number of past paper question, here they ask you generic question, right? Procedures on completeness of payables and accruals, such as, or on sales tax. And they have not given you any information about that. So then you can write any four procedures on that aspect. But here, scenario specific information we must need to find. Now, so trade discount, let me open that point where is in the scenario. Yes, trade discount point is here. Here. Once again, let us read it now. We need to verify the 980 amount recorded is correct or not. We have to perform audit work. Trade discount. Now, first of all, the focus is whether they are eligible for discount. What is the eligibility criteria? Whether they meet criteria. Then is the amount recorded is correct. All these three things. Now, so Pimento company values inventory in line with the industry best practices, which is to use selling price. Okay, right. Here, company trade receive a trade discount supplier which is linked to total amount purchased. In accordance with the supplier contract is one source of information. That what are the terms and condition? This point, first of all. What are the terms and conditions attached with that? Auditor has to first of all verify whether they meet those terms and conditions or not. And then what is the percentage of discount offered? That need to be verified. Okay. Then They have to check the record of purchases, meet the criteria. Record of purchases, that whether how much purchases the company have made during the year, whether they meet the criteria. Then recalculate the discount for them. And then review what is the source. Recalculation is the source to verify the discount is correct. Second, any correspondence with supplier that may be tell us that what is the discount available. Post year end bank statement, if discount is received, credit any amount received or credit note received from supplier. So this is the source. So four procedures. So I have told you that one is supplier contract, their eligibility, whether they meet. So what is the source? The other source is record of purchases of company. Then amount is correct. So I have told you three sources. Now drafting procedure is a job that should be written complete procedure. So you see here, review supplier contract to confirm the terms and condition of discount receivable, and that they qualify for this discount. Recalculate, or you can write recalculate the discount receivable and agree to the inclusion in the company's verify correctly recorded. Then verify from the yes trade discount receivable to the post year end bank statement, credit note, or supplier statement. It is recorded correctly. Review correspondence of company with supplier to identify any information relevant to discount receivable. And yes, this is analytical. Compare the level of discount receivable to the previous year. And any significant fluctuation, discuss. So all procedures are scenario specific. Now, so the next point is ethical issues. Now, identify and explain three ethical threats that may affect C company's audit of Pimento. For each threat, recommend appropriate safeguard to reduce threat to acceptable level. 6 marks. 3 means 2 marks each threat. Now each threat, further explanation, let me explain further. So 2 marks each means you have to write, you have to explain threat, explain, not identify, and write safeguard for each. 1 mark each, 1 mark and 1 mark. So how clearly marks are allocated. Explain how threat will arise. What is the name of the threat and how it will arise. I repeat, explain means issue, what is scenario, information, which threat will arise, name, how it will arise, the process. and how it will impair auditor's objectivity. How to rise means how it will impair auditor's objectivity. Note down this point. Safeguard directly scenario specific recommendation. What does student do the blunder? They start copy pasting safeguards from notes and don't make them as a recommendation over here. Next. So come here. Let us read it. During a meeting, Pimento Company finance sector has mentioned to the auditing partner he is keen to align the objectives of Pimento Company with its auditors. Coronado Company and Company, sorry. To assist in achieving this, he also suggested that audit fee should be based on percentage of final profit for the year. One ethical threat. The first ethical threat. Pimento Company's finance sector has requested that Coronado Company provide some accounting and bookkeeping services. And this should be as part of routine. Second point. One, let us explain these two first. They want fee to be based on profit for the year of the company. This is called contingent fee. Just a minute, please. Now, so the first point is fee based on profit percentage. This is called contingent fee. And contingent fee, it creates self-interest threat. That auditor will want fee to increase and hence profit will increase. So the audit work will not object on the increase in the profits so that their fee can increase. How it will in effect? So this fee should be rejected because no safeguard can reduce this ethical threat to low level. That the audit fee should be based on the work performed and the team members involved. Simple as that. I will take you to the answer. Don't you worry. Second point. They, yes, they are providing accounting and book services. They have requested, sorry, they provide bookkeeping services and they will be auditing the same. Create self-review threat. Because accounting record the prepared by auditor while this explanation is very much important. Students don't explain this thing and lose marks. How self-review threat will arise? That because during audit of financial statement, they will be reviewing the same accounting record they prepared already and will be reluctant to identify their own mistakes, own errors. What is the recommendation? Now, so these is this company, Pimento Company, is it listed company? Yes, means. Any information given about it? It is listed company or not? For listed company, the service cannot be provided. Okay, unlisted, right? You found that. Okay. No, not necessary. Listen, this point is very much clear. Your codes of ethics specifically says if client is listed, you cannot provide accounting services to them. Not allowed. Okay. So this is unlisted company, not listed. Okay. So here this service can be provided. If you can, where it is not clear, you can write if. Why? What does it mean? Why? Say it again. Writing why will not ask the question in full. Please ask full question. You can open your mic even. Where code has clear guideline, this cannot be done. You can't question that. Remember that. For listed company, code has clear guideline. That ethical threat is very high because the public interest is involved. You cannot provide bookkeeping services to them and for a preparation for statements. For unlisted company, you can provide with separate team conducting their review of their work. Is that clear? This point should be very much clear. This is knowledge. Okay, now, so the next point is, so come to the answer first. These 2 points. So, what is the issue from scenario? Contingency, threat, how it will impair auditor's objectivity. This is very much important. Explanation is, well, welcome. How it will impair objectivity or independence of auditor. This is very much important. Very much important. If you are not explaining it, don't expect marks. So politely reject the contingent fee, that because threat cannot be reduced. Let explain the audit fee should be based on the time taken to perform the audit. Next. So finance director requested it. Issue, review, which threat it is, and how it will impair the objectivity of auditor. This is very much important. Sorry. They will be reviewing their own work, less likely to challenge their own work. What is the response? Use if they are unlisted company, not listed, then it can be provided. Safeguard, separate teams, using their work and review as their work as well. Now, one of the Pimento company's main supplier, H company is also audited by Coronado company, and due to negative articles in the press, Pimento company's finance sector have some concerns over the financial stability of. Okay, he asked the engagement party to inquire of, okay, team as to whether any going concern issues which would affect suppliers' ability to continue. Read it carefully. This is unusual point. Normally, it has been tested such points in AAA before, but they have tested it here as well. That we are asking our audit partner, they are auditing our company, that you people are auditing our supplier as well, right? You give us information of supplier is going concern or not. You have information. Your firm people go over there. It is breach of confidentiality principle for auditor. Because such information can be provided only which is required by law or professional right and duty to disclose. So this should be politely declined. Simple is that. This is a different type of question. Point. Okay. The audit manager is currently carrying out a review of the staff for the Pimento company's audit. Staffing for. She is considering including, okay, finance director's daughter going for the audit of same company where the father is finance director. Close family relationship. Familiarity threat, yes, and self-interest threat. She may not talk against the job of her father. If she will point out errors, he may feel like that my father will be in trouble. So his job should be secured. Okay, so she should not be appointed. Some alternative person should be. So now come to the answer. So the first point, okay, issue. What is the principle being breached? What the, yes, enough if you write only this. Not mandatory to be written. The audit manager, again, a partner of, should politely inform that this is not possible to provide this information. Simple is that. The manager is considering the daughter of Pimento finance sector issue. Self-interest threat and how it arises, how it will affect audit work, how it will impair objectivity. Decisions are made, her father, financial interest, or she'll be accepting her father's work too much, may not be questioning that. Alternative person instead of her. Now, the next point is, yes, two advantages and two advantages. Now, the next question is here in front of us. Two advantages and two disadvantages to Harper Company of outsourcing internal audit function. Very easy. 4 marks. So, what are the advantages of outsourcing internal audit? Okay, their employees' training cost. No, we will read the scenario. Okay, so they are going to outsourcing to a specialist company, Tennyson. Harper Company is going to engage them. So, first of all, every cost will be decided. They can remove their employees, don't need to train employees, immediate team will be available. So, planning can be done easily. And the very important, they can hire them for a short period of time. Harper Company can, yes, specific project, specific duration, but it may not be possible for the employees of the company if they recruit employees. But were there two advantages? Done, properly explained. Two drawbacks. Now, so second is drawbacks. First of all, their cost in fact may increase. Their own department may be less costly when you hire specialized people. Outsources, normally their cost is higher than expected. Okay, then if we see the scenario, they have their small internal audit department already. What will happen? They need to make them redundant, or they may need, so the cost of redundancy, or they may need to shift them to other department. Cost of moving, retraining may be high for the company. And third point, the actual, two have to be written. One more point. The actual quality they are expecting from outsourced department. It Tennessee company, it may not actually be received. because they may not be working as expected, as promised. So quality may need to be monitored, maybe compromised, in fact, and they cannot be dictated like employee as well. Now, so I have written some points here. Two advantages, two disadvantages have to be written simply. You will read it yourself. Sorry. Yes. Now, the next question is identify and explain 8 deficiencies in the system of internal control and provide a control recommendation to address each of these deficiencies. Now, so 8 deficiencies. Now, come to the notes. Deficiencies, how to explain. There are two types of questions on the control in exam, which are commonly tested. Two types of questions. The one type of question is they ask you to write yes, to identify direct controls and write test of control, which is not part of this paper. Normally, they are testing both type of questions in the same paper. But here they have asked 8 deficiencies in this past paper. So yes, it is quite technical to explain these things. Now, how to explain direct control? I'm not going to talk right now because it is not the topic. Come to the deficiencies. Yes. Deficiencies, identify control deficiencies from scenario, and it can be authorization and approval deficiency, documentation and record keeping, IT controls related deficiencies, physical control, access controls, HR record related deficiencies, financial reporting, accounts recording related. It may be segregation of duties, such as. So you see here, deficiencies can be out of these. Now, so how to explain? I have, you just see here. There are 2 steps. First of all, issue from the scenario. This is always this is a control deficiency because what is missing? What is wrong? Because the sales clerk is responsible for both recording sales and handling cash received. Deficiency. This is identification. Explain what can go wrong. This could lead to, this means that, explain specific risks. What can go wrong? Consequences. Link to financial statement impact where possible. Show how fraud where possible. So this lead to sale correct potentially misappropriating cash by recording false refund and pocketing the money, resulting in. You see, these statements are very much important. Very much important. Note down these points. You can take screenshot of this as well. Although it's video, I will try to share with you people as well. The session recording. Control recommendation. Okay. There is a lack of. So these both together make explain audit risk. Oh, sorry. Explain deficiencies. There is current system fails to. This may result in. Exposes the company. You see? Like this. Explaining the deficiency. Recommendation are specific. Start with they should do, must do, need to be specific what to be done at there to address that weakness, that specific weakness. Ensure recommend directly address identify control weakness. Very important. Make it practicable. Yes. The company segregate the duties by agreeing cash handling to separate cashier while sale clerk only quarter. Now, so let us proceed further. I have make a mnemonic for you here. Dream. I D for deficiency. What is wrong? Explain specific consequences where possible. Action, recommend, specific, and follow up controls as well. Let us proceed further. So, to the question. So, 8 deficiencies in front of you. Let us proceed further. So, it is 1st July 2025. You are an audit supervisor with Riveray Company preparing for preparing the draft audit program and reviewing extracts from the internal control documentation for your client Harper Company in preparation for the interim audit for the year ending 30 September 2025. Although payroll and inventory are standalone systems, the sale and purchase modules are fully integrated into computerized accounting system. Harper is a home furnishing retailer with a head office, a central warehouse, and 20 warehouses across the country. Harper Company sells goods to individuals and corporate customers. Okay. Now here systems are starting where deficiencies we need to identify. Goods sold to individuals are paid for at the time of purchase with credit, cash, and or credit sales. And each store must submit a daily sales report located at head office at the end of each day. The daily sales report for all stores are reconciled to the cash and credit card taking report from the okay. Dailies are reconciled to cash and from the every Friday. Weekly they are so what is the weakness? Daily sales report from each store. They are reconciled with the cash, sales from the till. What is sales report in the till machine system? And what is the cash and credit card receipts? They compare them on Friday. Once a week. This is very dangerous for the business. That this is happening too late. And it may result errors and even cash being stolen, not submitted, and not detected timely, lost to the company. So that must be reconciled on daily basis. This report, daily sale report with the cash and credit card must be reconciled on daily basis by the finance person. And any discrepancies should be followed up. And this reconciliation should be reviewed by a responsible official. Now, just see here the answer, the first one. So, daily sale report deficiency, D. R, dream. Remember, dream. I told you that what is wrong, what can go wrong, what is risk? Here, risk of something wrong happening. How? Next. And may result in errors or missing out cash. Impact. What can go wrong? Fraud. Yes. Effect. Now, specific solution. Sorry. The sale report should be daily reconciled to cash and credit card. Daily basis. And discrepancy should be followed up. This is complete control. Now, remember, monitor. DREM. Right? No, not the EAM, sorry. Yes, this is specific action. DREM, dream. I wrote wrong spelling of dream, you see. Monitor, follow up of this control. This is now this complete becomes one control. The reconciliation then should be reviewed by a responsible official who should evidence the review, sign that this review have been done. Very important. Very important. Very important. Next. The next point is here. New corporate customers are required to undergo credit checks. But on some occasions, this has not happened due to staff shortage in the sale department. Oh, what is it? Deficiency is given. What is the risk? So it means that what will happen? So it will have this company may have sold to credit goods to the corp to poor credit, customers. And hence leading to higher irrecoverable debts or bad debts for the business, impact for the business when it is not happening. So the next point is yes, what is the recommendation? Recommendation is that all the credit customers must go under check, credit checks, and then should be granted credit sales. And this process must be reviewed by a senior person and signed on a regular basis. Now, the next point is corporate customers are provided with the 30 days and all invoices are paid by bank transfer. Each day, Sam Turner, a finance clerk, posts the bank receipts from the online banking system to the banking ledger account, updates the customer account. Oh my God, so many things by one person. He is doing so many things. There is a lack of segregation of duties. So this tasks done by one person, so many, it means there is risk of error and fraud and not identified. So what is the recommendation? Bank reconciliation should be prepared by someone else. It should be assigned to other person. Posting bank slip and customer account, that can be done by by Sam Turner. Okay, so yes, so that should ideally these three roles should be separated in three persons. But if it is not possible, at least bank reconciliation should be prepared by some other person. Come to the no here answer. Now you see here deficiency. So what is the risk? Higher risk. What is effect on the company? Now what they should do? Action. As properly explained. Addressing the risk. So they should go credit checks. Simple enough. Which should be reviewed by a way of signature, whether this work is happening or not. The next point is a finance clerk, Sam Turner, the issue, same copy paste. What is the deficit? Lack of segregation of duties. An error impact. You see here, very important. DRE, effect. What should happen? There should be bank receipts, updating the list, and bank record. Three should be separate. Different individual. Not practical, at least bank reconciliation should be done by. Okay, now, next. So the next point is, yes, Harper Company has a purchase ordering department based on its head office. On receipt of an approved purchase requisition, a purchase clerk releases a purchase order based on the approved supplier list, which is regularly updated. Purchase orders over 5,000 are authorized by purchase director, and below 5,000 are processed immediately. Processed immediately. What does it mean? They are not being authorized. Any fraudulent purchases below 5,000, which are non-business related, personal, may be ordered as expense of the business, costing the business risk of fraud because there is no authorization needed. Recommendation: all purchase orders must be authorized, and authorization should be where less than 5,000 should be assigned to some other person, junior managers. Okay. Now, so very clearly, not rocket science at all. In my opinion, this is the easy question in this paper. This one. Goods received in the central warehouse are inspected for quality and quantity and checked against the supplier delivery note. Only. This is again repetition. This was also repetition. Multiple past papers. It is also repetition. Multiple past papers. They're checked against delivery note, not with the purchase order. This is weakness. Because they are not being checked with the purchase order, so wrong quality or quantity may be accepted, which Harper may not need, and it will not be detected. So incorrect quantity and quality may be accepted, which is not needed by the company. So what is the recommendation? On the receipt of goods, the goods ordered should be checked against purchase order as well, copy as well. And the person who receives that, they should sign by evidence, by sign that as evidence, they have checked the goods received with the delivery note as well as purchase order. So 2 points. Let us go and read and analyze the answer. So purchase directors only authorizes purchase orders over $5,000. Orders below 5,000 are not authorized. So D. Increased risk of fraud. Risk. Risk of incorrect. Something. How? Purchases unrated goods not required by the company. All orders must be authorized. Below that, 5,000 junior managers. They should be assigned the limits. Okay. Now, next point. Deliveries of goods are checked against the deficiency. The supplier may have delivered goods not ordered or in the wrong quantity and quality, and it will not be detected. So goods not paying the goods not ordered and not required. Impact, risk and impact. And what is the action? Action must address this issue. The risk or impact should agree the yes. They should agree with the purchase order as well as delivery note, and with the checks being evidenced by way of a signatures. Now, next. Only the warehouse and finance department has access rights to view complete GRN. What is wrong? Now, again, this is repetition. Here I am writing RR repetition. Multiple times it has been tested in some different way. Now, purchase department does not have access. They do not know whether order has been completed, and they cannot mark order completed. They may, they may, of course, reorder the goods, or the company may have not received the goods, and they are not intimated. They cannot follow up because they don't have right to CGRN, purchase department. So there is a copy which should be accessed by the no must be of GRN must be accessible by the purchasing department, so that they can mark an order complete once they verify the goods receipt. Okay, and if there are unfulfilled orders, they are able to follow up that. Simple is that. Now, a payable clerk inputs purchase invoices into the system and updates the individual supplier account. Documents count controls are used to that a correct number of invoices have been entered, but no other checks are performed. Means you are counting that how many transactions have been entered. You are not checking the amounts. For example, accuracy. Document count, what is that? How many documents are there to enter? 10? 10 transaction entered, done. Now, what is the accurate amount? whether complete transaction invoice has been entered or not. It is not being verified. So suppliers record may be incomplete and suppliers may be understated and may not be paid timely, correct amount. So in addition to that, someone should check the accuracy of the amounts entered as well, so that no mistakes have been done in the entering the amount. So now I will go through the answer 2 points once again. Now, so only the warehouse team and finance department has access right to view GRN. Purchase department doesn't have access. So they cannot monitor order has been fulfilled, which have not been, they cannot see. So it may affect the company's ability to fulfill orders as well. It may affect. So what is the recommendation? The purchase department should have right to access view GRNs. Should agree the GRN to order and then change the status to fulfilled. It should verify GRN to the copy of purchase order. Enough if you write this. The next, document count controls when inputting the purchase order. So they can confirm number of items, but cannot provide accuracy or validity. If they are not accurately input, so incorrect amounts, underpayment or overpayment of supplier, disturbance of relationship. So in addition to recommendation, specific, they should check accuracy, that no mistakes have been made while entering the details of invoice. Next, all employees are paid by bank transfer for each month. The payroll system is computerized. It is not necessary to carry out checks on. Now you see, again, it is repetition. You see how many points I have identified. It is fourth point. Fifth point. Yes. Repetition. That system calculation of payroll, it is not being checked by anyone. So what will happen? Any error in the system may cause incorrect wages and salary calculation and paid. Wages and salaries may be unmisstated, and employees' relationship will be disturbed. So there must be someone, senior person, who must be checking the calculations done by system of wages and salaries for accuracy and sign them before payment is given. Again, repetition. All the members of payroll department has access to change. Now, what will happen? So, unauthorized changes in the salaries, amounts can be made. Incorrect salaries may be paid when everyone is has so risk of fraud in the payroll. So only senior person should have access to that. It should be password protected. And all the changes in the standing data must be, an exception report must be generated and reviewed on a regular basis. Then what changes have been made and whether they are valid or not. So you see here how easy it is. Yes. The payroll calculations are calculated by computer. Yes. System error will not be identified. Wages and salaries being understated or overstated. Loss of employees' goodwill. A senior member of the payroll department should be recalculate the gross to net pay calculations. They should recalculate for a sample of employees, not all, for a sample of calculations. Verify and sign that. You see, all members of payroll department have access to change employees. Unauthorized errors, incorrect wage salaries, risk of fraud. Only senior members should have access to outstanding data. Password protected. It's not needed. Exception report should be automatically generated by system for any changes. This report should be. So one, this first point and this point. I recommend this. Now, so the last point I think is there in the scenario. Yes. On occasions, employees are required to work overtime, particularly in busy periods. Overtime is paid monthly in arrears at the end of month in which it is worked. All overtime reports are reviewed by finance director each quarter after, again it is repetition. If you have done past paper question on control, these are so many repetitive points. That overtime is paid and then it is being checked. Which means incorrect work, fraudulent claims may be made by staff of overtime. And company might be paying for the work not done, increasing the company's cost of payroll. Harper company's cost of payroll. So all overtime payment should be authorized by some responsible person, ideally their departmental head, okay, by signature on the overtime work, and then they should be paid. Now, so that's the end of this question. Overtime reports, you see here, deficiency, not authorized prior to be paid. What is risk and effect? Being paid for not work not done, or amounts being paid incorrectly, resulting in increased payroll costs to the Harper company. All overtime should authorized by the line manager by writing and signature on the overtime report. It is done. Students, once again a 5 minutes break. Then we will come to the audit substantive test questions are coming. Very good questions. I will try to wind up this past paper today. Okay, just 5 minutes break, and then we will come back to the substantive test question scenario. See you in 5 minutes. Hello, everyone. Now, here is the question in front of us on substantive test. To describe substantive procedures on the auditor should perform to obtain sufficient appropriate audit evidence in relation to the matters identified regarding Everest plant equipment. Now, you see here, the requirement is not asking us which matter, which aspect. So, matters identified regarding plant. So 6 marks means 6 procedures, 6 substantive tests we need to write. So now come here. It is 1st July 2025. You are an audit supervisor of Denali Company and final audit of Everest Company for the year ended 31st March. May 2025 is due to commence. Now, so Everest Company manufactures garden furniture. Its draft financial statement show total asset of 32.2 million and profit before tax of this. Okay, the following matter has been brought to your attention. Property plant equipment. Everest Company has 3 factories located across the country, a head office, and one central warehouse. In March 20x5, an earthquake occurred near the site of one of the factories. The factory was significantly damaged. However, the properties were and inventories were unaffected. The company spent 8.8 million repairing the factory, out of which zero point 0.5 million was recognized in property plant equipment. It also purchased new plant and equipment machinery, costing this to replace item which has to be scrapped. There were damage beyond repair. You see, I have identified a few issues. Okay, now, so some assets were disposed of, some were acquired, some was the repair. Okay, so we have to write substantive tests on all assets, especially focusing these issues. We can write some generic procedure about depreciation as well. Okay, for example, on additions as well. Now, so one by one, let me give you a hint how to write substantive test on this scenario. First of all, just see scrapped. The asset which is being scrapped, their disposal proceeds we need to verify. Yes, we need to verify that the profit and a loss, okay, sorry, disposal proceeds, and then we have to, from where to verify? Bank statement. Then come to the 0.6 million new purchase. From where to verify? From the purchase deed, from the purchase invoices. I'm sorry. We need to verify. Then 0.5 million repairs. We have to verify its details, whether it is actually enhancing the property and meets the criteria for capitalization. Now, so 0.3 million. Yes, you see here, 0.8 million is total spent, 0.5 million capital, so 0.3 million. It's detail as well. We need to verify that whether it is correctly expensed. It need to be expensed. So specific to now depreciation charge. Yes, for the disposal items, depreciation should be removed from the accumulated depreciation account. Recalculate, now you can write some, recalculate the depreciation charge for the year. Physically inspect a sample of additions and to the assets of the company, whether they exist at the company premises or not. Now, the next point is, students, substantive tests, PASS, that it must be starting with some action verb. There must be some source to verify items. There must be some purpose to perform procedure. At least these three should be present. And scenario specific. Pass each substantive test. It's now writing that. You can identify this need to be verified, this is the source, but writing and drafting is a job. It should be sufficiently detailed. I am going to the procedures. Yes, it should have been removed. You are right. It should have been removed. That's correct. That's correct. You are right. You are right. So let us go to the answer. Substantive tests. So I will be starting with the procedure, the same. Review the non-current assets to confirm the asset disposed of, removed, and new equipment have been added. New, for example, of new additions. Verify whether they have been, they are in existence. Physically verify. New addition, verify the amount, invoices, and bank statement, the payment made. Verify that. Verify that. Next, recalculate depreciation charge for example of addition and disposal, that they have been correct depreciated for correct number of months. Recalculate the depreciation charge, dispose of, and confirm it has been removed from. You see here, nothing rocket science. For the assets sold, verify sales proceed to the bank ledger, bank statement. Verify. Breakdown of 0.8 million. That 0.5 relate to the capital items. 0.3 million spent. Repair maintenance have been recognized. Verify. And disclosure. How many you need to write? Only 6 out of these you need to write. Only 6 you need to write. And remember, the blunder students do, they don't write written practice properly in AA. And written practice they are actually doing when they are doing properly, when they are showing it to examiner. They write incomplete sentences and they say procedures are done. You need to write complete answer. Mark it. Then mark spend time. The time you spend on writing, at least 50% of that time you should spend on marking your answer, identifying your mistakes. If you are not doing that, you are at risk. I'm telling you. You are at risk if you are not doing it. Next, describe the audit substantive procedures on current asset receivable. Now, again, scenario specific information is here. So, how many marks? 4 marks for procedure. Here it is. Very good. Read it. Be quick. Everest has submitted a claim to insurance company to cover the damage to property, plant, equipment, as well as for the for a loss of profit, as it was unable to use the factory for the 2 months while it was being repaired. The total amount claimed is 1.8 million, which comprises zero point 0.4 million for the loss of profit and 1.4 million for the damaged property, plant, equipment. The company has included 1.8 million as current asset receivable. Now, insurance is receivable. So, first of all, we need to discuss recoverability. We need to verify whether it is recoverable. Tell me what is the source to verify recoverability? Tell me. Recoverability and then amount. Our procedure will direct on these two areas. Recoverability, tell me. Tell me, please. What is the source? First of all, insurance contract. Review the details of company's insurance contract to understand what is covered and what is not, such as whether loss of profit is covered and the extent of damage covered by that. Okay? Now, the second point is we need to verify zero point 0.4 million loss, verify zero point 0.4 million loss, obtain the working from the management, verify its supporting documentation. This is correct or not. Okay? And recoverability. Review the correspondence with the insurance company of company. What is correspondence of company with the insurance company? Regarding the claim to assess whether the claim is likely to be successful or not, amount to be received or not. Recoverability. Now remember, insurance claim, I'm telling you IS 37. Contingent asset can be recognized when it is virtually certain to be received. If it is contingent asset, it should be disclosed only. They cannot recognize it. So this should be to discuss with the management the incorrect treatment, how they have recognized whether it is virtually certain to be received or not. If it is probable, it should be disclosed only. Right? Now, review financial statement disclosures. 4 points, 4 procedures. I have told you more than that. You see here, come. Starting with insurance claim document. Okay. So I will see, yes, insurance policy to understand level of cover, loss of profit, assets, whether they are correspondence with the insurance company to determine likelihood of success of the case. You see, this is recoverability. Recoverability. Now, the next is amount. Breakdown of 0.64 million of profits claim. Verify the 1.4 million spent where from the invoices. Amounts are being verified. So review post, very important, very post year end bank statement to assess whether any payment has been received from the insurance company. Discuss with management why they have included a receivable, as it is only recorded when it is virtually certain. And the last is again financial statement disclosure. Review the financial statement disclosures. Let me write this procedure for you. Review financial statement disclosure of company, whether disclosure related to insurance claim have been given as per IFRS and laws and regulation. Now I have written a generic procedure by you. You can replace this insurance claim with any issue being discussed in the scenario, and you are good to go. You are good to go to get 1 mark. Now, so students, the last is going concern. The audit procedures on going concern. This is the information. Everest company has an overdraft facility of 2 million and the bank account balance at the year end was overdrawn by 1.9 million. Current liability reliant on the overdraft facility operate daily basis. The bank reviews the renewal of that. The covenants attached to the offer required a profit before tax of 1 million and assets of at least 30 million. Now we need to check. Profit before tax is 1.3 million and assets are here. Now, our procedures, how many marks? 5 marks. Regarding going concern issues, regarding league litigation, regarding, uh, you know, the covenants. So procedure should be written on that. Whether this company is going concern is saved or not, and renewal of overdraft as well. So, first of all, yes, ongoing concern on the cash flow forecast, very important. So, yes, specific to the scenario, review the agreement with the bank whether there are additional covenants other than this and whether they are being complied. Any review post year end correspondence with the supplier to identify any litigation. Inquire the lawyer of the company to identify any litigation and impact on the company's going concern. Now, yes, board minutes to identify any issues, financial issues for the company. Whether, yes. So, students, these are very important points. Now, cash flow forecast is a source to verify company's financial strength, future. So, very important. Cash flow forecast is prepared by the company for the next 12 months that it is going concern. So, auditor will obtain the cash flow forecast, review whether they are reasonable, whether they are, yes. So, preview post year and sales and orders to assess whether sales are, revenues are same what is forecasted. Okay, whether that is same as forecasted. Now, so students, the last question is here. Here it is. Discuss the issue. Now, 5 marks audit report and describe the impact on audit report of adequate and inadequate going concern disclosure. It is now 20th August and the finance sector has just informed the audit team that Everest Companies Bank will not make a decision on renewal of the overdraft facility until after the auditor's report is signed. I'm sorry. The financial statement include going concern disclosure. However, the audit team still have to assess the adequacy of this disclosure. So remember, if there is adequate disclosure and inadequate of going concern uncertainty is there. Company is facing going concern uncertainty. First of all, issue. They say discuss the issue. Issue is that negotiations are in process regarding overdraft facility. The bank is asking for audit report before deciding on the renewal of overdraft. And company's daily sale depend upon that. Company's daily operations. So this should be this going concern uncertainty should be properly disclosed by the company. This is the issue. Now, adequate disclosure. So it means audit opinion will be unmodified. But there will be a paragraph. There will be a paragraph, and the paragraph name is material uncertainty related to material uncertainty related to going concern paragraph that should be added, highlighting the uncertainty, referencing to the financial statement disclosure. You referencing that it is disclosed on that page. If disclosure is inadequate, it is called misstatement in financial statements. And it is material misstatement. So qualified except for opinion will be given that except for this matter, financial statement give true and fair view of the company affairs. And basis for qualified opinion paragraph will explain that there is material uncertainty not given properly. Come to the answer. So discussion of the matter, outcome, negotiation in process, material uncertainty, doubt to the going concern, so it should be disclosed. So if it is adequately disclosed, the audit opinion will be modified, unmodified. Material uncertainty will section will be included in the audit report. And our audit opinion is not modified. Okay, right? Next. It will be included in the after the opinion paragraph. Next. Disclosure inadequate. Opinion need to be modified. Material misstatement due to inadequate disclosure. And opinion paragraph will state that financial statement, except for this matter, financial statement does not give true and fair view of the company affairs. The report will contain basis for qualified opinion paragraph. Okay, now tomorrow, today's session is done. Tomorrow I will be talking about the mock, pre-December mock published by ACCA. And I will be focusing the section A there. Okay, and some part in the section B as well. I will be talking that as well. Okay, any question from your side? Any question from your side? All right, thank you for joining. God bless you. See you tomorrow. Take care.